Good morning, everyone. It is like just after 11 a.m. So it's still a.m., right? Good morning. Good morning. And today is June 12th of 2024. My name is Melvin Coleman. I'm president and CEO of the ABC. Today we have yet another informative, relevant, critical information being shared by the ABC's Financial Services Committee. And we thank you for showing up to receive this knowledge. So I am going to turn it over to the fabulous, dynamic co-chair of the Financial Services Committee, Miss Leslie Taylor, to introduce our speaker for today's session. Hello, Leslie.
Hello. Good morning, Melvin. Good morning, everyone. Glad to be here. All right. So I want to say good morning, everyone, to ABC members and any other guests who might be attending this webinar. I want to welcome you to our Wednesday webinars. It's brought to you, as Melvin said, by the Financial Services Committee of the Atlanta Black Chamber. Every second Wednesday, we will bring you financial topics that you need to know. So today's topic is understanding business structures for tax purposes. And this is a topic that is critical, whether you are just starting a business or whether you've been in business for years and years. As Melvin mentioned, my name is Leslie Taylor. I'm the co-chair of the Financial Services Committee, along with Sheena Robinson. And the mission of our committee is centered around providing financially related education and support for our members and the greater community. And for us, this mission is very important. We take it very seriously because it aligns with the mission of the ABC to serve as an advocate for the creation and growth of competitive, profitable, and sustainable Black-owned entities. So we like to provide quality education and training programs that will help you build wealth and build your businesses. So today, with no further ado, I have the pleasure introducing our speaker, Kevin Marquez. And so I'm going to share a little bit about Kevin before he dives into the content. So Kevin Marquez is a native of New Orleans, Louisiana. He has been in the financial services industry since 2003. He's a graduate of Xavier University of Louisiana with a bachelor's of science degree in finance, as well as he has a master's degree in secondary education and education specialist in educational leadership. He's the owner of Accutax Business and Financial Services. And at Accutax, they provide a ton of different financial services, from bookkeeping to tax preparation, W-2 and 1099 reporting, business startup and incorporation. He also helps folks with life, health, and disability insurance. So with no further ado, here is Kevin, and I'm looking forward to what he has to teach us today. So go ahead, Kevin.
Good morning, everybody. Thank y'all for attending. I'm glad y'all was able to make it. I have some good information that I'm going to share with you all, as Leslie stated. Now we'll start from, can you see my screen?
Yeah, Kev, you need to put it in presentation mode.
Gotcha. All right. So we're going to talk about understanding business structures for tax purposes. And the purpose of this presentation is to provide you some of the financial implications of your business structure, because a lot of times we hear people say, tell you what kind of business structure that you need to get, but they don't actually dive into the numbers. And we are in business for ourselves. So the bottom line is the main concern for all of us and all of our businesses. So without further ado, here we go. All right, we talk about business entities first. All right, if you're an entrepreneur, you have to register as one of the following entities, depending on how many people that you have. So if it's only you, you can register as a sole proprietorship, a single member LLC, or as a corporation. And when I say corporation, that can be an S-Corp corporation, but we'll get into that when we get more deeper into the business structures. But I want to try to get everybody to know that LLC is not your only option if you first start your business. All right, if you have one or more partners, if it's you plus one or more partners, you have to be a general partnership, a limited liability company, which is LLC, or a corporation. That can be S-Corp corporation. All right, next, how do you decide? How do you decide what business structure that you want to get when you're first getting started, or even if you already existing. All right, are you solo? So if you solo, you go to the left, you say yes. All right, do you have personal assets? If you have personal assets, then you may consider being a single member LLC to protect your personal assets. If you don't have any personal assets, you can consider being a sole proprietorship. And it's just some of the things that you consider. All right, if you're not solo, all right, do you enjoy paperwork? If you don't mind doing the paperwork, then if you have more than 100 shareholders, you can get a C corporation. If you have less than 100 shareholders, you can get an S corporation. All right. If you don't like doing the paperwork, then you can get a general partnership or a limited partnership, because either way, you're not going to be personally liable for anything, any kind of litigation against the company. All right, next, here's some things to consider for each business structure. All right, for sole proprietorship, the control aspect. The sole proprietor has total control of the business operations and complete share of the profit. Also, the sole proprietor has all of the liability. All of the sole proprietor's business and personal assets are at risk when you have a sole proprietorship. So really, a sole proprietorship, really, a lot of people start off that way when they don't know any better. But the sole proprietorship is not going to give you any kind of extra benefits, because as you see, the tax is going to be reported on the sole proprietor's personal tax return on the Schedule C, and we'll get into the tax implications of that Schedule C in a few slides later. All right, administration for sole proprietorship is no administrative requirements other than obtaining a business license and registering the trade name. You can get a tax ID number from the IRS, but when you're a sole proprietorship, that one tax ID number that you get from the IRS can be used for all different businesses, as long as you're gonna be a sole proprietor. So just say if you have a landscaping business and a barbershop as a sole proprietor, when they give you that tax ID number, you're gonna have to use the same tax ID number for both businesses, because you're not structured with the state. All right, limited liability company. Control. The member shall profits per operating agreement, which specifies the management procedure. Liability. Generally, members only risk their investment in the LLC. All right. Taxes. Single member LLC pays double taxation through self-employment tax, because the tax is reported on the Schedule C on your personal tax return. And that double taxation, we're going to dive into that later too, so you can actually see the impact of that double taxation on your tax liability. Now, if you have multiple members in your LLC, you may be taxed as a partnership or a corporation, depending on the election filed with the IRS. So what that means is, if you have an LLC, that's not a bad thing. You just have to get your LLC classified as a partnership if you have multiple members, or as an S corporation if you have one or more members, to save them tax dollars at the end of the year. So we'll talk about that later also. But that's the thing with the LLC. It's not bad, but you have to get the right tax classification for it to save you money at tax time. All right, the administration for the LLC is similar to the corporation requirements with regard to formation and operation, which means that you have to get registered with the state and file your annual registration with the state every year, and just make sure you have that election file with the IRS. All right, C corporation. Control shareholders, ownership rights, and elect directors. The directors govern general affairs and appoint officers, and the officers manage the business operation. All right. Liability. Neither officers, directors, or shareholders are liable for debts incurred by the corporation or torts committed in conducting the corporation's business. And when they say torts, that's any kind of crime or violation against another person for any kind of litigation. All right, taxes. The disadvantage of the C corporation, you're gonna pay double taxation, because you're gonna pay tax on the corporation's profits, which is gonna be 21%. And then you also have to pay taxes on the dividends that you issue out to your shareholders. So if you got ordinary dividends, they're gonna pay that based off your personal tax rate. That can be up to 37%. And the qualified dividends, if they qualified dividends, you won't have to pay on those. But that's the one of the disadvantages of having a corporation. So the corporation only makes sense for you when you have more than 100 shareholders, because you'll be taking that tax liability and you'll be spreading it out among 100 people. So $100,000 tax liability only would be $1,000 per person if you had 100 people or more in that corporation. All right, administration is formal incorporation process and annual registration with the Secretary of State, and its comprehensive record keeping and tax filing requirements. All right, the S corporation. S corporation, that's what that's one of the main focuses of what we're doing today, S corporation and partnership. All right, S corporation, the shareholders have ownership rights and elect directors. The directors govern general affairs and appoint officers, and the officers manage the business operations, just like the C corporation. All right, liability is the difference. Neither the officers, directors, nor shareholders are liable for debts incurred by the corporation or torts committed in conducting corporation business. All right, taxes is no double taxation because an S corporation is considered to be a pass-through entity where the S corporation reports the taxes on Form 1120, and then the shareholders report their income on Schedule K1 to get a K1 statement that you use that's transferred to your personal tax return. So when you get that K1 statement, depending on the amount of income that you made, if the income puts you from the corporation puts you in a 12% tax bracket, you only gonna pay 12% on the income. Whereas if you had a single member LLC or sole proprietorship of that same amount of income, you got to pay the 12% in that 12% tax bracket. Then you have to pay an extra 15.3% for self-employment taxes. And that's where you save the money at. And that's where we headed to in a minute. All right, administration. The formal incorporation process and annual registration with the Secretary of State and comprehensive record keeping and tax filing requirements. All right, partnership. Partnership is similar to the S corporation for tax purposes. You have general and limited partners sharing control of the profit of the partnership per the partnership agreement. So you type up the agreement for your partnership, and you can get that done by somebody who has legal expertise. That's not something that I would suggest that you do on your own to make sure that everything is covered in case you have to transfer ownership due to somebody dying or leaving the company, or if y'all have any kind of legal disputes. Liability. General partners are generally liable for obligations of the general partnership and tort damages incurred by other general partners. Limited partners are not personally obligated for liabilities of the partnership because you only have a limited investment. You're not investing fully into the company. All right, taxes. Also with the partnership, there's no double taxation because it's the same as the S corporation. Partner is taxed upon their profits, the share of the profits, and the only difference is the partnership files Form 1065 to the IRS to report their income and expenses for the taxes, and then all partners still get a K1 statement just like the S corporation. So those people won't be paying that extra 15.3% in taxes too. They're only gonna pay what's in the tax bracket. The more partners you have, the more you split the profit, the more you split in that tax liability. So that's the less that everybody gonna pay. All right, administration. The registration requirements are similar to the corporation, but the record keeping and tax filing requirements are not as extensive. All right. Financial statements is one thing I want to briefly look over before we get to the tax file scenarios. You got your income statements, your profit and loss statements. That shows your revenue, expenses, and profit over a specific period. Balance sheet gonna show your assets and liabilities and your company's financial position. You have your cash flow statements that show your cash inflows and outflows. And then you have your shareholders equity statement that tracks the changes in shareholders equity over time, reflecting transactions like dividends and stock issuances. For the most part, when you file your taxes for your business, you're only gonna need the income statement, which is also called the profit and loss statement, and the balance sheet. That's the two most important things that you have to have. And that's gonna be due to you having your bookkeeping up to date to make sure that you can create those statements, because that's not something that you can, I mean, it's possible for you to do at the end of the year, but it'll be too much work for you to try to do at the end of the year, especially if you have like a large volume of transactions. So that's something that you should keep track of throughout the year, like using a professional bookkeeper or using QuickBooks to keep up with all your account activity for your business. All right, payroll compliance reporting is the next thing. All right, payroll compliance reporting involves ensuring that the organization follows all relevant regulations and laws when processing employee payroll. This includes accurate tax withholdings, timely filing, and adherence to labor laws. All right, we got two ways we can pay people if we have a company. If you have employees, you have to pay them through a W-2. And so if you have W-2 employees, you have to report and file the W-2s for each employee to the IRS by January 31st of each year before, because your employees cannot file the taxes before you report the W-2s to the IRS. And this is all, this has been, I'm not sure how prevalent it is now, but I know when I first started filing, when I first got in the tax business in like 2003, it was a big thing that was, and even when I moved to Atlanta, I moved to Atlanta in 2005, a lot of people would come try to say they want to file their taxes with the last check stub. And some people used to do it from, I mean, and whatever comes with that, I guess they had to deal with that. But your last check stub not going to be as accurate as your W-2. The W-2 going to have everything on it. So the IRS already knows if you submitting the correct information to them because they receive the W-2s from your company and approve that before the W-2 is issued to you. So the W-2 is the correct form that you have to get filed to make sure everything is accurate filing for your company and for your employees as well. All right, if you pay contractors, you got to pay them by 1099. All right, your 1099s also have to be reported to the IRS before you can issue them to the contractors. And you have to do that by January the 31st also. All right, they have different types of 1099 forms. You have 1099 MISC for miscellaneous income. That can be for somebody who works for you that just did it like a side job for you while they're working for your company. Or you have 1099 NEC. That's for non-employee compensation. That's if you're hiring a contractor outside of your business. All right, the 1099 can be used to report income types such as freelance earnings, rent, or investment income to the IRS. And like I said, the business must provide the copies of these forms to the IRS and to the recipient by the 31st. Now, this is very important because what I've been running into this tax season for some reason, a lot of the small businesses that I help with their tax situations, a lot of them fail to file their 1099s on time. So that's an expense that they had to try to find other ways to write off or just had to pay taxes on that income because the contractors already filed their taxes already. So you don't want to go to somebody a year later and say, oh, here's your 1099 from last year, because when they go back to amend their taxes and include that 1099, that's going to increase their tax liability. So that's going to run the risk of you messing up the business relationship that you have with that person for you not being on time. So it's best to just stay on top of that. And if it's too much for you to do, then you need to get a professional to keep you on top of things to make sure everything flows, because you don't want to get in the habit of doing everything late, because that's going to lead into some other penalties and things that you going to probably not be too favorable when you get them, because that's going to cost you extra money. All right, so here we go with our tax analysis. All right, our business structures tax analysis. All right, we have James Dixon, who is the owner of ABC Insurance Agency in Atlanta, Georgia. In 2023, James had a $40,000 net profit from his insurance sales and must file his business taxes for the year. On the next few slides, we will explore the difference in James' tax liability based on the following business structures. We're going to look at the sole proprietorship or the single member LLC because they get taxed the same way. We're going to look at the S-Corporation, the partnership, and the C-Corporation. All right. So as we can see, all right, if we look at just the sole proprietor, the business income for the sole proprietorship or single member LLC was $40,000. This puts them in a 12% tax bracket. So the individual tax liability for filing this, because this is a part of your personal tax return on a Schedule C. The individual tax liability at 12% was $2,021. But the self-employment tax by you being self-employed is at 15.3%, is an extra $5,652, which means that your total tax liability, James' total tax liability for 2023 is $7,673 off of $40,000 profit that he made off his business. All right, if we look at the C Corporation, if James filed his taxes and he was a C Corporation with the same $40,000, all he would pay is, first thing he would pay is the taxes on his corporate income, and that corporate tax due is 21%. That's going to be $8,400. And then if he has ordinary dividends and he issuing ordinary dividends, that's another $4,800 on those dividends. His tax liability would be $13,200 if he had ordinary dividends. If his dividends were qualified, all he would pay was $8,400. But he got offers is 76, 73, 8,400. That's some pretty stiff tax liability. All right. But if we look at my favorite two structures at the bottom, the ones that's most advantageous to all of us, look at the S corporation, $40,000 of income. This is one person S corporation, just James by itself. His individual tax liability is $2,922. That's the only tax that he pays is $2,922. So compare $2,922 to the $8,400, $13,200 for the corporation, and the $7,673 for the sole proprietor and a single member LLC. And if we really look at it, the single member LLC is what most people have. But look how much money that you're giving away if you compare roughly $7,700 to $3,000. So you're giving away too much money. And if James had a partnership and had another member with the same $40,000, the tax liability is still going to be $2,922, right? But he divided between two people. If he have two partners, because it have to be at least two people, they will pay $1,461 each on the tax liability, saving a lot of money. So the best business structures for tax purposes are the S corporation and the partnership. And you just need to get that. You just need to get the classification file to make sure you can save that money. So let's go to the actual savings. All right. So if we look at the savings, if we compare the sole proprietorship and single member LLC to the S corporation and the partnership, we're saving $4,751. I mean, everybody can do a lot with that amount of money, I'm quite sure. All right. If we compare the C-Corp to the S corporation and the partnership, with ordinary dividends, we're saving $10,278. And with qualified dividends, we're saving $5,478. So as we can see, going through this presentation, the best thing that's going to help us is the S corporation or the partnership. And that takes me to the end. If y'all have any questions, I'm open. My contact information is here, and I'm open to answer any questions that you all may have.
Okay. First of all, Kev, your slides are always excellent because you break stuff down in your presentations with the slides, and it gives us a real visual. And so I took some stuff away from that for certain. So for the Q&A, if you want to come off mute and state your question, that's fantastic. That's actually my preference. But if you wanted to, for some of you who prefer to put something in the chat, I mean, you can do that as well. And let's see if we have any questions for you, Kevin. And wow.
Hey, Melvin?
Yes.
Hey, this is Leslie. So I do have one question before I have to hop off. And I wanted to clarify with Kevin. In your slides, Kevin, was that based on income or was that based on profit?
It was based off the profit. It was based off the profit from the business.
Okay. I just wanted to confirm that because your one slide said profit, but then one of your slides said income. So I just wanted to clarify. But I have another question. Oh, so I'm gonna add one more question for the people. And this question is this. A lot of times I've heard people say, well, actually, I'll ask it this way. At what point do you recommend business owners consider the S-Corp? Is there a certain limit in terms of how much they're making in income, or when they first start out and open, should they do it? I've heard some people say that. Like, what do you say to that?
Well, for me, I started my businesses off as corporations because if you have a loss, if you take a loss in your business, it doesn't matter which structure that you are gonna have because you're not gonna pay taxes on that loss. But I mean, how good can you be at predicting when you're gonna start making a profit? So I always planned on making a profit as soon as I started my business, even though I took losses in some years. So if you started from the beginning, once you make that profit, you'll already be set up. But if your business is not in a profitable stage yet, you have an LLC, then that's fine. But as soon as you start making a profit and you start reporting that profit to the IRS, then the S corporation is going to help you, or the partnership is going to help you save that money. So I would say just do it from the beginning because it's not going to cost you nothing extra to do it. You just got to fill out get the forms filled out and sent to the IRS to get that classification. So I would say do it right away.
All right. Thank you.
You're welcome.
Can I ask a question, please, of Kevin?
Yes, ma'am.
Yeah, this is Danielle. Yes, Waters. I just recently switched my CPA from California to well, I need to find someone in Georgia because he was saying it's just too complicated with the laws that are there's a difference, obviously, you know, from Georgia to California. I wanted
Yeah.
to find out, I did file an extension. Are you able to help me with my taxes going forward for filing that?
Yes, ma'am. Yep, I file all forms, everything from all the business structures that we just listed, the sole proprietor, LLC, corporations, nonprofit organizations. I file all forms. I can help you with that.
Okay, so I just need to call or send you a text or what have you?
Yep, text, email, all my information there. You can text me, email me. Even if you go to the website, I got a contact tab on there that you can contact me on there.
Awesome, awesome. Thank you so much.
You're very welcome.
And I want everyone to note the contact information because Kev, I'm going to ask you to take the presentation down, and for the Q&A, I kind of wanted to have that look as opposed to having.
All right, gotcha.
But,
so you want me to just post it? You want me to post all this and post my information in the chat for
yeah, please do. And I mean,
Gotcha.
most who want it definitely should have had it. It's been up for a few minutes, but
right.
but yeah, okay. So and great question, Danielle. Glad you're in the session. I haven't seen you in a little while. Glad you're here. So and so the recording of this session is going to be posted to the Chamber's Facebook page. Give us until the end of the week. So you definitely can go back and look and do whatever you need to do. I think there is some real information here that Kevin has shared. Again, it's relevant stuff. And some of you already know it. You're probably already an S-Corp or whatever, all that, but some are not. So that's why we do this. And there are a couple of questions in the chat. Did somebody else have a question they want to come off mute and ask Kev? Okay, I'm going to read this question from the chat. I'm a full-time employee, trade stock and manage property on the side. What's the best structure to write off my expenses? I get he gets a margin loan and pay interest on it. That would be through his broker.
All right, I can see it. So for this particular situation, you can have an LLC for the liability purposes, but then you just get it classified as an S corporation or a partnership. So it's a form that you have to fill out. It's a 2553. It's an IRS form that you have to fill out and send to them. You get your LLC structured as a S corporation just for tax purposes, so you can save that $4,700 that we was talking about on the slide just now.
Okay.
And that's only if you're a single member. Now, if you got more than one member, it's gonna be the S corporation or the partnership, and they both gonna get taxed at the same rate. So that's your two options if it's more than one person. But if it's just you, it would be the S corporation election.
So for that individual, you're recommending an S-Corp. If it's
they can keep their LLC, but just get it classified as an S-Corp for tax purposes.
tax purposes. Okay. All right.
And then I see another question up there saying, what is the effective tax rate on the S-Corp? And that just depends on your income, because the S-Corp is taxed at your personal tax rate. So they say if you worked on a job and you made $35,000 and that puts you in a 12% tax bracket, it's going to be the same thing with your S-Corp. If you have an S-Corp and you report $35,000 of profit, then you're still going to pay that 12%. You're just not going to pay that extra 15.3%.
Okay. And Kev, put your information in the chat.
All right. Yeah, I did. I'm going to do it again.
Yeah. Well, you did? I don't
Can you see it?
I don't see it, bro. Yeah, put it. Yeah, do it again, because I do not see. And while I'm doing that, Jamila, her question is, does the QBI deduction ever play into your conclusion that LLC is typically better than sole proprietor?
No, well, the qualified business deduction, that's all related to Schedule C. And if you're a sole proprietor or LLC, you still following on Schedule C. It's the same tax form that you follow. So there's really no difference.
Okay. And we'll let you finish putting your information in the chat. And while he's doing that,
Yeah, I did it again.
did you
see it?
No, does
Oh, you
anyone?
know what?
Yeah, did you
It-
say, I'm saying, did you hit? I don't
No,
see.
I hit send. I saw it did. It didn't send to everyone.
Oh,
That's what it did.
right, yeah. So yeah, you can copy paste that under and put it.
Yeah, that's what I'm doing right now.
Okay, all right. Okay, so so
There you
again,
go.
I
This
want to
last
thank
one.
everybody for coming into the session. We'll take another question or two, and make sure you get Kevin's information, which he just shared. Kevin, I think I see another question from Muhammad.
Yeah, at the bottom, you said for trading purposes.
Yeah, something. Yeah, you see that?
All right, now for that, I'm not an expert on trading, Muhammad. So you might have to talk to somebody who's that might be more up your alley, right, Melvin?
Yeah. Well, then, but I'm not a tax professional. I'm an investment guy, right? So he still is going to be someone who really works in that lane.
Because he's saying how many hours he should trade per week to be able to consider it as a business.
Oh,
So
okay.
I mean, as long as you're making money, as long as you're making money, it considered a business if you got income and expenses. I don't think
Yeah.
the number of hours would have anything to do with it.
There might be some language, but yeah, that's an interesting question. I don't have the answer, Mohammed, but hopefully you are a profitable trader. Okay. So listen, everyone, if you don't have any other questions for Kev, we again appreciate you coming into the session. We will post the recording onto the Chamber's Facebook page, maybe in a couple of days, but definitely by the end of the week, it should be posted there. And thank you for checking out the webinar today. Look forward to maybe you're gonna be tuning in tomorrow for the cybersecurity that we're doing with the MCAT committee. I know Friday, the Transportation and Logistics Committee, specifically focusing on commercial vehicle insurance. So anybody that's a relevant topic for you, show up on Friday at 11 a.m. Commercial vehicle insurance. That's what they're going to be talking about. So, yep. Continue to show up for us. We appreciate it. And Kev, great job, man. Again, I just think putting the information out there, you got me thinking about some stuff. So that this was good. This was definitely on time for me personally.
And
All right.
I mean, you know, the just the information that I gave, like I always did have S-Corporation, so you'll never see me sweating at the end of the year for tax time because I know the liability is not going to be as much as it would have been if I'd had any other structure. And I mean, I just position myself the way it's not going to be something that's going to really cause like no real financial burden on me.
Understood. Okay. All right, everyone. Thank you so much. We'll do this again soon. Thanks, Kev.
All right, thank you, Melvin. All right, talk to y'all later, everybody. Y'all contact me if you need to.
Thank you.
You're welcome.
Have a good day.
Thanks, Kevin.
You're welcome.
Thank you. Great information.
Mandatory seminar, whatever, for the kids.
Thank you, Dr. D.